Good morning, everyone, and welcome to the European crossover webinar. We are seeing the equities come off their lows. Now, they actually came off those lows. If you're with us during the presidential, whatever you call it, speech, talk, whatever, we'd actually fallen and fallen and fallen. We came off those lows, then we dipped, and then we came off again, and we made another run back down here just shortly. You can see here, before making another monster run back up here to this 2645. I'll actually pull up the spoos one moment. Here we go, right here. And you can see here, it's been a bit tumultuous here. Look at this. Fell apart, came back down, rallied back up again. So we've kind of run the gamut a little bit here. Also seen Nasdaq, and we'll take a look here with the gold market. We're actually at 1640. Let me just quickly move into that. Apologize for a little bit late start. And gold's maintained a little bit of a steady run up in here. Not quite as volatile. I mean, it's been volatile, but not what you're expecting or what you've been seeing here in the indices. With that, let me just go on and quickly go on and move to the FX, and then we'll go and bring up the calendar. So bear with me one moment. There we go. And let's pull up the calendar. I'm not sure why it's not coming up. Although I did restart the Reuters feed, but I didn't even pull up the calendar. But the calendar should have already come up rather quickly. I'm not sure why it's still blank. No, nothing. Not sure why that is the case. But anyway, let's go on and take a quick look here with the euro dollar. Now, actually, we can just take just a quick preview of actually it was the dollar yen that reacted quite a bit. To be rather obvious in the sense that the movement that we saw in equities. And that was down, down, down. This market didn't like Trump's speech. Basically closing off travel from Europe, with the exception of the UK. So we saw this market really get yanked down, only to come back. Bear with me one moment. Only to go in and come back, and then we turn around and stayed lower here. And this is on the dollar yen, but going and see if that calendar's come up. Okay, here we go. So rolling into today, not until a little bit later on, you can see here at 6 a.m. Central Time, which is 7 a.m. Eastern, a little bit of some European data, but really nothing until we come into the States, which is going to be jobless claims. PPI will be out, as well as obviously the big thing is going to be the ECB. And one of the reasons it's been a bit of a drag here on the euro, and we covered that actually, was because of the story that we saw out of Reuters, the trouble that the Italian banks are in, obviously for a lot of other reasons, but really has been pressed along with the coronavirus, and the possibility or likelihood that the ECB is going to have to backstop to a certain extent this whole issue. So let's go on and move in and just quickly do a story. So the dollar slid in another seismic shift to price in more U.S. interest rate cuts on Thursday after President Trump disappointed markets with the coronavirus plan light on details. The greenback dropped to 103.32 yen, fall as much as 0.6 and against the euro, and lost 0.6 from the safe haven Swiss franc, while stocks plunged. The Trump announced on Wednesday a plan on travelers from 26 European countries entering the United States, well, essentially a ban, or not being able to travel. He unveiled economic steps to counter the virus, but his address from the Oval Office was light on medical measures beyond the assurance that the virus has no chance against us. That was something else. The market was looking for more, and said a strategist at Bank of Singapore, and the travel ban is part of the solution, but the more important parts are still missing. They are really the public health insurance, paid sick leave, free testing, free treatment. The market right now is looking for perhaps more action from the Fed, given the disappointment from the White House. Indeed, futures markets reacted swiftly. They're now pricing in the U.S. Federal Reserve's moving the lower end of its benchmark funding band to zero when it meets again next week, if not before. The deflationary shock that it assumed would trigger the U.S. entry into the zero-yield world is turning out to be a combo of a trade war, oil price, and COVID-19. They're even close to even now as an official U.S. recession this year. Trump's address with the markets already in turmoil amid a string of increasingly dire news on the coronavirus, the longest run in U.S. stock market history, has ended with the market talk that selling to cover margin calls was keeping gold and bonds from rallying. The World Health Organization described the outbreak as a pandemic. Italy, where deaths rose by nearly a third overnight, has shuttered all shops except supermarkets, food stores, and pharmacies. Australia on Wednesday announced an $11.4 billion stimulus, including wage subsidies and cash payments to small businesses through the Aussie, though the Aussie slid further with mood a growing recession fears. Investors are waiting to see how aggressive the ECB will act in its meeting later on today. Investors expect to cut the main deposit by 10 basis points, but it's certainly no sense that rates are already at record low. The half 10% for the cuts could hurt the bank's margins and squeeze lending. Move this out of the way, and we'll move right into the analysis. There we go. So the euro has formed an inverted hammer on the pullback. You can see that from yesterday, closing at 1267. Resistance will be 1328. We almost made it there, not that far away from there. Actually, I believe we came up right up here, which be 1326. Yeah, just right there, 1328. Would be 1328 with support remaining at 1231, confluence with 1220 to 38%, and additional support comes in at 1201. So once again, resistance is going to come in at 1328. And remaining once again here at 1231, which confluences with the 1220, but you can see we've just about nicked that 1328. Let's go and move into the cable now. So the cable pared back even further after closing below the pivot of 2980. Support will be 2742 with resistance at 2920, followed by the pivot. Actually, you can see here we've just about nicked that. Well, let's see. Oh, here 2840. So resistance coming here at 2920. And we did remember yesterday, we kept the bias, but we're going to move that now to bearish because that is the second day below that pivot. And you can see here with support at 27.42. The Aussies pullback continued on Wednesday on the likelihood of additional cut by the RBA with a stimulus package to combat coronavirus's economic impact. Resistance will be 65.41 with support at 64.36. We're not that far. I think we've almost tagged the 64.36. Yeah, we got to 64.34. So support at 64.36. And 65.41. Obviously still bearish, but as I mentioned, we've continued to weigh down, and even today we've pulled back. Obviously a far cry, and we actually, if you look at this, we've probably almost made it to the 61% of this range. If you look at this, let's take a look at that. Not that we want to point to that, but I'm looking as just the range itself. I guess, yeah, we would. Hang on a moment. Sure enough, we just exceeded the 61% of that day's range. Look at that. That was one heck of a move. Hang on. I'll move on to the Kiwi. So the Kiwi finished the session on Wednesday with an inverted hammer. You can see that clearly. Resistance will be 63.12 with support at the key weekly level of 62.5, 62.05. You can see right here, in case we press further, but you can see it's trading a really quiet session right here. But once again, we'll stick with this to 62.05 and then 63.12 on the upside. Moving on to the dollar CAD. The dollar CAD, another day, another new high. The pair closed just below 38. Resistance will be 38.67 with support at 37.26. Well, we've actually gotten as high today as 38.21. So resistance is going to be 38.67. We supported 37.26. And this has just been quite the run here. It's really knocked a lot of people out of the box. You even see here, right here on this day, Tuesday, it looked like we might, look at how we finished in the middle of this range here. And although we did close higher, that was the one key there, but it looked like there was probably a good chance that they would pair back some, not that it would change as far as the outlook, but that we would probably pair back a bit. But no, we've just gone at it, and we've even pushed even further. So thus the thoughts, another day, another new high. Let's go on and move into the dollar peso. Well, obviously higher if you consider what happened in equities. The peso stayed above 21. The main resistance is going to be 21.55. You can see we clearly got above that. followed by 2180, and we've just cleared just a little bit beyond 80. Let's see, right here, made up as high as 2186. So we're going to stick with our resistance, which was 2180, although we're actually above that right now. But you can see that we're stretched, and maybe we'll go and start to pare back, but we'll have to get in the US session to see how that plays out. And actually going to have to go and move into the 2-hour chart to go and look at a better idea of where support would be. It's going to be right there at 2132, followed by 2104. Yeah, 2103. Wow, what a run. Let's go and move into the dollar yen. So the dollar yen closed near the mid range of Tuesday's session. Resistance will be 551. And clear as the support, it was mentioned 452, 415, and then 322. Well, obviously what happened with the S&P selling off, the market did not care, did not find any confidence from Trump's speech, and thus we really came off. And you can see where they came right down here to this level, which is 320. That's going to be the support here, 320. And resistance comes in right there. That's 464. That's the flash crash low. So and some additional resistance come in right there at that low, which would be, I thought it would come up a little bit higher than that, but it's going to be 498. And let's go and move on to the cash dollar index. The dollar index closed stronger on Wednesday with the potential to move to 96.90. Well, we did see that dip here, and support is 96.01, followed by 95.53. Well, we almost look like we're going to make a run to that 96.01. So actually, once again, it's going to be on the upside, 96.90, 96.01. You can see right there with that close there, that's 96.89. So and 96.01. It's just, some of these moves are just something else. So just like we saw the equities rally up to 26, and fall back to these lows, but we rallied up to 26.44, fell back to 26.28, and now here we are on our way back down to 26.26. Point is, we are just under some increased immense volatility. Not it's quite obvious, but I'm just saying these levels that's all, honestly, that's all you can base some of these moves on, are just the levels, because the moves obviously are at times, rather extreme, to say the least. Let's go on and move into the cross rates. Well, we did go in and see the Kiwi yen pair back. We had this move here. You can see here where we'd actually, this was here, the 66.50, 66.39 there here. And on the way up, we were looking for potentially a move. Our resistance was going to come in at 66.58. The high was actually 66.62, so it wasn't off very much. But on this downside pullback, as the yen has strengthened, we've certainly seen this market pair back. Let's go on and move into a shorter time frame to see where we find some support at. Right there, 64.57. And resistance for today just coming right across here. You see these touches coming right there, confluence with this high here. And that's going to be 65.75. Okay, we did go in and break back below 1704. That was one of the concerns. I didn't think we'd pull this far back. We had actually had our support previously from yesterday, 1847, but you can see here against the yen, the euro is really giving up. And I guess with the ECB today, probably taking action, you can see here where the yen would strengthen against that. Obviously, the euro yen pairing back. So we've gone and broken below the 1704. Let's go on and move into the 2 hour to see if we can get something a little bit closer where the potential market can move to. And that's actually going to be right here where we see these touches coming across, which is going to be 1668, which is not that far away. And on the upside, I'm not even sure it'll make it up to that height, but let's go put it right here. It's going to be right there, 1710. 1710. That might be cutting it a little bit too close. Right there, 1728. And actually, I was looking on a 30-minute. That's where it's going to come in right there, 1748. Moving on to the euro wad. Well, we continue to still exhibit strength as the Aussie pairs back. I mean, you would think that we'd probably see a little bit of a pullback because of the ECB coming up, but that's not even making any difference here at the moment. You can see it coming right across there, which is going to be 75.28. You would think that this would be a bit more vulnerable, and it still may be. Support's going to come in right there at 73 even. Still quite a ways, but look how far we've come. But I don't know. I would have thought that the year would be at least a little bit more susceptible. We'll actually go as far as 73.38. But I would have expected a little bit further pullback on this. And let's go and move on to the Euro Kiwi. Coming right across these highs, which is going to be 81.21. I know the Antipodian currencies are weak. They have a stronger, it would seem, but not necessarily, a stronger impact with coronavirus, although Europe has really experienced more. And with the ECB, I would have expected them to be paring back further. They just simply haven't. With support coming in here at, you can see coming right across this top, which comes just below this bottom, which is going to be 78.49, 78.49. We've already seen this market come off quite a bit. We're actually looking at it right now at the 30-minute to get a little bit closer look, because once again, with the huge moves we saw on Monday and basically just seeing this market give back a lot of that move. Let's see if we can get a confluence with a fib. We're right here at the 50% mark. And things have gotten, with equities, I wouldn't say, well, I was going to say as bad as they could get, but you can know that they could always be a little bit further. So we'll just go with this low right here, which is going to be 66.50. Resistance just above here, but we're trading in a very, very tight range. I mean, we're looking at a 30-minute. That's true, but I mean, look, we're trading in an exceptionally tight range. The resistance is going to be just above these highs, which is right there at 67.46. And it looks like the equity indexes are right back at their lows all over again. This is really something else. Let's now move into the guppy. Certainly I can see this pushing even lower in light of the weakness that we've been seeing with sterling, support's going to come in right there, 31.96. Where's the resistance? Right there at that high. You can see the lows here, touching right there at the high. If we were to get a snapback, it certainly doesn't seem like it at this point, but that's where the resistance would come in at 33.66. And lastly was sterling odd. As weak as sterling has been, hard to see it even pulling back against, the sterling odd even further. We're going to go right there with support coming here at 97.46. With resistance coming in right there at 99.32. With that, we'll go and take a look at equities. And we're back at the lows again here. Look at that. We can go and take a little bit longer term look. I think that's what we need to do at this point. I thought this 26.40 was going to hold out. Well, after the speech, we came back. We rallied up. I think we rallied all the way up to 26.68. I actually hung around for a while and traded it and finally caught just a touch bit of sleep. Actually, I was real early here in the session. Was I popped in and before most everybody else came. I think Byrne and Stelios were the only ones in the chat room at the time. But you can see, boy, we're back below 26.12. I thought this was going to hold. I really did. It looked like we were going to. This is some key support here, and we're still pressing beyond this. Let's go and take a look here on a fib. Well, the 2563 is at 78%, so it looks like that's where they want to go to. This would actually confluence here with this level here at 2575. You see that? So 2576. That looks like this is where the market will want to go to. I really thought this 2640 was going to hold up. I actually made a little bit on the downside, and then bought twice up in here, but then when I stepped back in on these lows here before we got to these lows, ended up giving up my gains back. I stuck around till late in Asia and came back to flat after giving up those gains, but I haven't done anything now. And look here with the lows. I really thought this 2640 was going to hold. I really did. I thought we'd see a pretty good strong bounce of it. Not, I mean, bounce in the sense of some pretty good short covering. But here we are pressing lower here. And this looks like what they want to go to. 2576 with 2563 being the 78%. And additional support level below that. Right there. It's actually going to move just a bit lower here, 2536. Actually, look at this high here. There. 2536. This will be an area where the market would be want to go into if we go and break below that. You got 2576, confluence with 2563 to 78% with 2536 as a backstop. And that looks like they will, that's where they'll want to go to if they want to go and break them even further here. Looking at the Kiwi, not the Kiwi, the Nikkei. I can't even think. Nasdaq, hold on one moment. Hang on, let me just. We are rolling over. We're going to be rolling over to the June, so new lows here on the S&Ps. Actually, using the Nasdaq in the Asian session, late Asian session, it's actually was pulling the SPOOs. Bear with me. %61 comes into 73.94. Pretty good little fall there. And some nice confluence coming across here. There we go, right there. It actually pulls it down to, when I touch all these, pulls it down to 73.77. $73.81. Oh, matches right there in 73.84 is 61%. That'll give them an area to go and take a run to. I mean, there'll be some additional support before they get there right here at 74.70, but that gives them a pretty good beeline to go after. Confluence here with the 61% of this entire move. Taking a quick look here at the gold market. These sell-off, I mean, the extent of these sell-offs across the board is just something else. Here's the gold market here. And you can see here, I kept track of I've got the Nasdaq. I had it up before, but I wasn't really paying too much attention. But what I was seeing here is that on a very, very short-term time frame, the NAS was leading the SPOOs during the Asian session, made up, I had the not nice, but had some gains, and ended up giving up those gains when I ended up picking up the SPOOs on the next round back down, and gave up those gains and a little bit some, and then made up those as I traded late in Asia, actually tracking the NAS. So with these side to side, but anyway, that being said, you can see here that the gold has come up. Now, one of the things we mentioned, we saw that in the news story, was one of the reasons gold is keep falling because margin calls are being done because of those with equity positions having to cough up, or the perception is having to liquidate gold positions and bond positions so they can make up for the losses that they have in their equity positions. We can actually bring this chart over here. I have it on a different screen. But you can see it's holding here at that 1641. Resistance is going to come up about the old 1656 for right now. And then let's move into the crude oil market. You can see we're well below VWAP, or at least for right now. 31.75 is going to be VWAP and point of control right here. But we've been all over the place here with the crude oil market. And support doesn't even come in here. Well, all these levels are just, I'm saying, we're just blowing by these, like blowing by mile markers. But hang on. Going to come in right there. So it's 30.32. And immediate resistance, if you're trading it right now, would be hard to believe. These are just, I mean, these are 30-minute charts, and it's just the ranges are so wide. Look at that, 30.67. So 30.32 on the downside, 32.67 on the upside. SPOOs are actually breaking lower right here. We're right now at 26.04. We're moving to that before we close out. Well, it's just going to be carnage tomorrow in the cash open. But look here, 25.76. We'll go back to that again. Looking at 25.76, which is confluence with 25.63, 78%. This is where it looks like this is where the market's going to want to go to. It's going to want to go to that 78%. And then, you've got 25.36 as a backstop. So you're going to have to use wider stops, and certainly no sense trying to catch a falling knife, although I thought this was going to be, not that I expect us to just jump and go to Venus, but I thought we were going to get a pretty good reaction off of this. But the selling has been so intense. I think it's just, honestly, I think it's selling begets selling, because after this big move, this was, look at all these touches here. This is not a 2-hour chart or a 30-minute chart. This is a daily chart. I mean, you would have thought that that market would have held that there. I thought, and like I said, I actually got long twice on some quick moves and made money. But like I said, as it came back down, it dipped down to that 27. I tried to jump right back in again, and I added and gave up those gains, although ended up coming back to flat. Just scalping it against with the Nasdaq as the lead. But look, we're still pressing lower. This market at this point now, people are looking for extremes for this market to go to. Well, you got 25.76 coming across the board here, with 25.63 being the 78%. And at least if that's going to hold, you got the 25.36 at the backstop. Let's see what happens. You'll have to pay attention to where volume is at, try and get an idea, but we probably won't get to these levels. I don't believe we shall see until we get into the U.S. session. That being said, thanks for joining us here on the European crossover webinar, and we'll see you in the chat room.